Hey everyone, we're here today with Craig Recadre. He's been doing commercial insurance for apartment owners for over 30 years, so we're going to do some question and answers with him. First question, why do apartment owners pay higher premiums than other properties, say offices or strip centers?
Primarily due to losses. There's been more losses, and so the premiums have to be higher for those companies to make a profit on those classes of risk. Losses are associated with careless renters who may have a grill on their patio that lights up the place, or they throw a cigarette on or they're smoking in bed. You've heard that one before. There's differences in the kind of construction, steel, reinforced concrete versus wood frame. There's also a lot of times in Texas we've been having one of the worst years ever in hail losses, and so weather-related claims are going to be more problematic with a garden-style apartment because of the roof surface area than, say, a office tower, which is limited roof surface area. Does that make sense?
Yeah, that's great. Does the insurance marketplace distinguish between apartments and condo associations?
The difference, they're both habitational risks. So that's one segment of the market that's being looked at, is habitational. But there's also a difference even within that group, and that is that condo owners by many markets are viewed as a better risk because they are owner-occupied.
Third question, how do underwriters determine the rates for their premiums for apartment complexes?
It depends on the risk factors. There's such a broad difference in the kind of risk factors with apartments. For example, you have what's called a Class C apartment, which is generally an older apartment, wood frame. It can be in a rough neighborhood. Many times it's maybe poorly managed. Some of them might have a poor loss history. They've had maybe a fire loss in their history. They've had maybe Section 8 tenants inside it, so that you've got a lower income kind of person there. They may have aluminum wiring. So these are all things that could be associated with a higher rate and a more limited market. On the other end of the spectrum would be those that are newer apartments, maybe even brand new apartments they're in strong neighborhoods, have a higher class of tenant that is perhaps more responsible and are well-managed properties.
That's good. Who are the dominant carriers writing apartments?
The marketplace is ever-changing. There's companies that enter the market a little like Las Vegas gamblers. They have a decent-sized capital and they think, well, I'll just roll the dice on apartments, and so they go in thinking that they have something maybe a little different, but most of it, they get at the table, they lose their money, and just like Vegas, they walk out without their shirt. Virtually all apartments are written in what's called the non-admitted marketplace, and these are carriers that are not licensed by the state of Texas. They are carriers that are operating here in a excess and surplus lines capacity. You'll see a place on there where it says it has a fee for it, excess and surplus lines tax that's paid to the state of Texas. They are in that market because it is not regulated. They don't have to be filing their rates with the state of Texas. They don't have to file their form with the state of Texas. That means they can raise and lower it pretty easily. It is also a little bit like that guy that had 4 accidents and 5 speeding tickets. Just some of your friends, David. But no, I'm just kidding. So they're in what's called a non-standard market.
Good. So the last question is, how do you add value to the quoting process as the agent? Because of our years of experience in apartments, we do know the marketplace very well. We know we know many of the owners, and we know what they are looking for. Many of them are essentially
very aggressive on price. They want to see their premiums, they capitalize that premium in their valuation of their properties. And so they feel like this is a huge cost factor for them, and it is. So we go into the market and we package their program, and we get as much information as we can, and we present it to underwriters as a complete submission that underwriters can get their head around. And we ask, we work with the underwriters to answer all their questions, and then get the rate down to where we feel it's as competitive as it can be. The other thing that we do is we try to stay up with the ever-changing marketplace with all the different carriers that come on and come and go. We need to always be aware of what's out there. Another way that we do it is for larger multi-location insureds. We encourage them to package the program, to provide for us to provide them what's called a master policy, and that gives them some economies of scale through combining these properties into one program. And so that's been a real benefit to a lot of these folks.